Hey, good morning. Let's trade some Forex. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. My name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. It's your way at Traders Way. Forex via ECN. Fixed spread, variable spread, whatever you want. Thank you, Copeland and Lowe. Happy New Year to you. Merry Christmas to you. All that kind of stuff. What I like to say is, peace on earth and goodwill to all. Yeah. So anyway, sorry, I got a little project going on. And my new PC hasn't arrived yet. So when that arrives, I'll start hooking that up. I have to take down my array, however, and put up, I have to mount them on the wall, so I got to get that, but whatever. So anyways, please visit TradersWay.com and open an account today. Let's take a look at the charts, huh? Alan Smoker. Good morning, Alan. Hey, Alan, you'll appreciate this if your last name is actually Smoker. I did some research around Atlanta. I wanted to find some high-quality firewood for my fireplace. And my fireplace is a little bit bigger than usual, so I have to get the wood cut a little bit larger than usual. So I had to find someone that would actually do this, versus the stuff you get at the grocery store. So anyway, so I find a place. It's the only place that offers wood that's FDA approved, east of the Mississippi. Let's just say at least in the southern United States. But I think it's the only place east of the Mississippi that has FDA approved kiln dried competition firewood, right? So, and they'll mail it to, so like if you go to competition barbecue places, this is their wood that's been kiln dried in a way that kills all the fungus, kills any bugs, kill whatever, and is super dry and all that kind of stuff. FDA approved, all that kind of stuff. And I get my bill, and the last name of the family is Smoke. It's the Smoke family that makes competition firewood for people that like smoke the barbecue. So the Smoke family makes firewood for smoking, which I just thought it was funny. And it's like SMOAK or something, but I just thought, how interesting. And I didn't know there was such an industry making competition firewood. So there you go. So I had them cut some wood for my fireplace, some for the outdoor pit. All right. Anyways, moveon.com. All right. So let's just go through. You know what? Let's do this differently today. Let's just kind of change it up. Let's go through the scans, not the typical setup. Okay. So all of these pairs are Aussie. Let me switch templates to make sure. I think they do have the. Yeah, there it is. The watermark. Okay, so here we are, Aussie dollar, and we're ending the year. More importantly, we're ending the month right here which is interesting for two reasons. One, it's essentially the projected low for the month of December. So even though, let's say the last month, because, I was hoping to be a bull, isn't necessarily what I wanted, I think what's most important here is it still worked. And all it was essentially is that my bias was still a little too bullish. Remember, I felt in particular, yen pairs would come down in January, somewhere between December 1st and January 1st. Where I was wrong was it came down December 1st and just kept falling. Usually it's the middle of the month, not the beginning of the month, but whatever. As a bull, this is my line in the sand where anything lower than that is just not going to be bullish at all. Did that work? Yeah, it actually did work. I mean, these rules of engagement protected us. The rules of engagement don't predict the future, but it helps you, how you say in English, manage the risk. So anything lower than this is just not bullish. Just technically speaking, that's what technical analysis tells us. Our technical analysis of this pair would say nothing is bullish about this anymore, right? So that's cool. That worked because maybe this wasn't expected, but this for bears and this for bears is straight up price action, right? Can you guys see that part? Just absolute total price action. This, absolutely for sure. This one, okay? And now here we are at the bottom. Now the second part is based on technical analysis. This is a projected low for the month of December. So even if you didn't get bias right, maybe you did, maybe you didn't, but let's say you did. I think there's comfort knowing that this isn't a random walk or chaos. That in the times when you're wrong, or if there are times when you're wrong, it's simply because the bias. It's not because you couldn't do it. It's just you were looking the other way. Right? If you can't see it, you can't catch it. So anyways, this could have been a shorter term breakout type thing. Breakout, pullback. That's an easy short. Bounce here. That's playable. Okay. And then this is currently our bottom, which is really good because, well, that's what we would expect. The aggressive bottom, like you're so bearish, it's the end of the world type bearishness. Well, that puts us down here. And yeah, there's time for that, right? I'm not saying that, it should or will, but if it's going to, there's time. But wouldn't this be great for a hold? The only problem is we got to be careful that what we want isn't necessarily what's going to happen. Excuse me. And we have to be careful that we're not fitting what we want into some sort of weird technical analysis that is self-soothing, so to speak. I think, like as far as dollar and yen, the new year could strengthen these things that are already generally strong. And I'm concerned about that because this move was so early. It's a little unusual for what I expected. It could start Thanksgiving. This move could start. But this wasn't Thanksgiving, nor was it the end of the year. So it's really a little bit odd. Like there's nothing wrong with these moves that we had in December, like the stock market decline and all that kind of stuff. What's strange about it is that I would have, if you asked me 3 years ago, Wayne, in the end of 2018 and the beginning of 2019, what would you expect? And I'd say sort of up and down in December, and then I would say straight down in January. Right? Well, it's like the seasons have changed. Everything is 1 month over, right? Well, Cedric, they're buying it back. And if anything, that's a good sign. But taking Cedric's point, why a bounce yesterday? Well, everyone that needed to earn their Christmas bonus did their Christmas bonus, and everyone buying back by the end of the year was buying back. And that's what very often how I think of January. Like for example, the end, or let's say the middle of December, like I've discussed, there can be often a dramatic move in the stock market one way or the other, depending on what people need to do for year end, things like taxation. You'd be surprised how important taxation is to the financial markets. It's a pretty big question for people with lots of money. Do you want to take profit now and pay taxes now, or can you wait a week or two and take profit then and pay taxes 18 months later? Well, that's one question. A lot of people do want to pay taxes later, not now. But then there are situations like, what if you're a loss? Can you take the loss now and write off other gains somewhere else? And taxation is, let's just agree, it can be a powerful part of the decision-making process. So that downward move that I typically expect in the middle of December happened in the beginning of December. Why? I don't know, because people wanted to. So what happens in January, right? And that's what I'm unsure of because of sort of the timing of some of these moves. So I'm concerned that we had a big drop in the stock market. Are we going to have another one in January? I'd say, well, that's pretty plausible. I mean, we had a 20% decline. That's pretty significant. We had basically a 50% decline in oil, right? So I still would have to expect that in January we're going to have something like this. Not based on technicals, but based on fundamentals. And the problem is this year, because this happened so much and it happened so early, this year I got to be, how do you say, I have to be very open-minded going into January. So I don't want to say too much now because I don't want to talk myself into something. Like, what if this, compared to a normal year, was December and January's move? What if we had that move already? I actually would want to see that. And this is why I'm struggling. I want to be as transparent as possible, where I want a lot of these pairs to go up fundamentally. And it's not even that I see them fundamentally. I want them to fundamentally go up. Because I think the market ultimately is a bullish market. Most markets are bullish markets. But I don't want to talk myself into it. And I think there's plenty of opportunity for this to fall further. But what does that mean? Are we going to have a 3A2 retracement? Are we going to have a 40% decline in the stock market? Like, are we only, December was halfway and we have a January, February, March drop? You know what? That's plausible. I don't want that for people, but boy, that could happen, couldn't it? And you say, well, why such the dramatic rise in stocks over the last 10 years and then suddenly, falling off of the cliff end? Well, the whole thing was created by the Fed, making money free, buying assets in the marketplace and driving up values. That's the stated goal of quantitative easing, is asset appreciation. Cool, they got that. So now that and isn't it interesting? Like, as soon as we hit neutral, it all falls apart. Well, you could say, well, maybe neutral is like pulling cards out of the bottom of the stack, right? Now, I don't think fundamentals being trade war with China and stuff. No. I don't think so. And I think the media makes too much of that. I think like Brexit is a massive screw up, and that's costing a lot of people a lot of pain and money. I think that's a much bigger problem than renegotiating trade terms between two superpowers. I think it's 600. Well, if you add the UK to it, what is it? 700 million people have a defunct economy. Between the UK and the EU, 700 million people that should be filthy, stinking rich, buying, stuff from China and not buying stuff from China. That, like, for example, I read some statistics a month or two ago where Europeans are essentially not importing anything. And why would you not import anything? Because you're poor. You don't have money to import. You're going to spend all your stuff locally, right? So anyways, if you're not importing, that's a pretty big problem. So that's my concern. China, U.S. negotiating trade terms? No, that's not a problem. That's just business. In my humble opinion. So anyways, so this is a bottom, is what I'm trying to say. Makes sense. Everything seems logical. Doesn't seem like it's the end of the earth or the end of the world or end of capitalism. This seems like beautiful, 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 well-organized price action. And if you had the right bias, so I'm happy to admit, or not happy, but I'm willing to admit that I did not have the right bias. I was hoping for a move like this first and then down. So I was wrong, but everything else was right. Okay. So you can sleep easy that it's not the end of the world. Okay, going back in time, I was trying to show you how I leave notes to myself. Aussie Swissy. We don't cover this very often. Right? Yeah, sure, Alan. Yeah, but that's what low interest rates are. So Alan says, Wayne, some big money players were able to borrow money at zero, buy stocks, blah, blah. No, but lots of people everyone actually was able to do that. And that's what low interest rates are supposed to do. That's what they're supposed to do. So you could buy real estate, for example. I don't know anyone that borrowed money to buy stocks unless you're talking about leverage, but okay. But like, how about Apple? I think not long after the bottom of the crisis was hit, Apple issued, what was it, a $1 billion bond? Why would they do that if they already had $1 trillion in cash? Well, the money was like free. Like, why wouldn't you? Right? So Apple hired the smartest people in the room to work in their finance department, and they're like, okay, now that you're here at Apple, what do you think Apple should do? And they're like, you should take the free money off. And they're like, free money? We already have a lot of money. Yeah, well, have more money. So, so even corporations were doing that, right? Well, Joe, okay, Joe, I agree with you, but let me, Joe says if you see the market crashing through monthly, there's something wrong. Yes, but also let's be careful with what we say. Okay. Yes, it's a very bad sign. If you're, let's say the market is supposed to be bullish. Nobody really wants the market to fall. Maybe some short sellers and stuff, but that's not the market, right? What does it actually mean, though? What does the technical analysis actually mean? That we're all going to, stand in line in soup lines looking for money? And no. What it means is relative to the month before or the period before. It could be weekly, it could be daily, it could be hourly. In this case, if you're talking about monthly pivots, relative to November, right? That's all it's telling us. Relative to November, prices are significantly a little lower. So another example of that is in September, we often blow through the pivots to the upside. And I tell people, don't freak out. Don't convince yourself that if we just destroy September monthly pivots, it's because we're so right that the market's going to just, go forever. What do I say? I say, well, we expect them to blow through them because nothing happens in August. So the pivots are really, really narrow. So they say, well, based on nothing happening last month, this month should be the range. But we know September is not technical analysis is only technical analysis, right? It's just technical analysis. And so the pivots are not necessarily smart enough to say, well, nothing's happened for the last 3 months, but next month, get ready, folks, it's going to be huge. Well, we know as human beings that people don't work during the summer, and then they come back in September and they have to get back to work. So we have to, that kind of thing, think ahead a little bit. So I'm not disagreeing with you, Joe, but just don't chum your own waters, I guess is what I'm saying, right? You need to filter, as a professional, you need to filter all that noise out and maybe, just filter it all out and just what happened, what isn't happening, what is going to happen, how are you going to get in, how are you going to manage your risk. These are the more important things, right? So we blew through some pivots. What does that mean to you? Oh, risk. Cool. Right? Cool. And then maybe take the opportunity to ask yourself, well, what is going on? Isn't it interesting that this big move happened right as the Fed essentially told us we're at or near neutral? So what happens when there is no artificial Fed support of the economy? What happens? You might write that down and say, well, everything that was elevated de-elevates. So if you're neutral, there is no emergency support of the Fed of the economy. There's no quantitative easing. There's no artificially low interest rates. Now, interest rates should be higher, but they're not artificially low. They're neutral. There is no inflation, which means nominal and real are the same. Okay? You take the you take the interest rate, subtract the inflation rate, and you get zero. And that's it, right? That's all that means. But it used to be you take inflation rate, and then you take the interest rate, and the interest rate was lower than the inflation rate, which allows things to appreciate, and all that's gone. So that's all that means. So don't get caught up in headlines. Yeah, don't be a robot, but don't. Yeah, so I'm not trying to say in reverse. I'm not saying that you. Some people say you should be emotionless when you trade, and I'm like, that doesn't make sense either, right? Just be smart. Just make sure we're focused on the right things. Again, what would you tell somebody over the holidays that says, wow, do you see the stock market? What does it mean? Is this another crash? Am I going to lose 50% of my net worth? And you say, well, you could. That's what the financial markets can do, especially if it's spooked. But what is the stock market? What is a stock? What is it? And what does it mean? And that's the conversation that I had over the holidays, even with my children. This is what we talked about. And I said, owning stock is a little piece of ownership of that company. Why would you like to buy that company? And my son's like, because they make money. I'm like, yeah, well, you can make money, but that's not the most important thing. People buy it because they not only do they make money, but they have expenses too. Insurance, employees, and then borrowing money for things like inventory and all that kind of stuff. And when everyone else is paid, there should be some leftovers for the owners, which is called profits. So you want not a company that just makes money, you want a company that makes profits. And he's like, yeah, that makes sense. So when you own it, you have a right to some of those profits. So now you have to find companies you like, but also that make profits. And do you care about profits 2 months ago, 2 years ago? No. So when you buy a stock, what are you saying? You think they're going to make profits in the future. Aha. So what are the, and then we go into interest rates. And I'm teaching my children this, 11 and 12-year-olds, right? Interest rates. And is that the government? Yes. Can the government help? Can the government hurt? All these things are much more important, right? So are we at a point where corporations in the United States cannot make money? Is our interest rates so high in the United States right now that money that's borrowed from a bank so you can do things like buy inventory, are those rates so high they can't be profitable? Are interest rates so high that people cannot buy a house? I'm like, dude, interest rates, right? Interest rates are at the inflation level, and inflation is at like 100-year low, right? So Rob's like, far from it. Well, that's what I would tell my friends. If you needed to borrow money for a house, can you find someone to lend it to you? You're like, I can get 100 people to lend me that money now, today. Oh, well, I guess we have a functioning credit market then. And are they charging you exorbitant prices? No. We're at historic lows. Oh, well, then there's no problem now, is there? And that's where we are, guys. So a 20% decline in something that's 1,000% overvalued seems pretty reasonable to me. That's all. And that's kind of where, like, going back to Joe's comments, like, we shouldn't freak out. We should ask ourselves why, and then from that, once we have an understanding of the truth, veritas. That's what a Harvard man talks about. Veritas, the truth. Once we understand the truth, then we're the ones that can create the future, right? And that's our job, guys, as money managers. Just sit down with your client and explain things like, yeah, this sucks. We saw it coming. It happened earlier than we thought, but it happened. But is it the end of the world? I don't know. Let's go through it. Aussie CAD. What do you think? Now, these are often things like the Christmas market opening and closing. It's not like a legitimate market, so sometimes you get these gaps. I wouldn't make a big thing about it. Yeah, veritas. Kind of like illuminate. You're enlightened, right? Power is from knowledge and truth. You know the truth. But anyways, I see this pretty sideways, but I was trying to hold this off, but we've had such, open-ended conversation today. I want to look at, should I do it this way or should I do it energy complex? I guess do energy complex. Okay. So, I don't know. I was thinking about buying oil. I thought about it actually in meditation. I haven't even looked at the chart, but I knew Brent was near 50. Right? And typically there's not a 10 8 pippers or $8 spread. There's typically a spread. With Brent so close to 50, and of course it was down here earlier, I was thinking about buying oil. Do you have thoughts on that? Ross, even if that were true, and I'm not saying it wasn't, but okay, whoever would buy based on that is also going to lose all their money when it comes back down. So even if that was true, which I disagree. But again, try not to get caught into that. Ross, have you been watching Fox Business? Ross has been watching Fox Business. Yeah. Yeah, turn the TV off. Yeah, Tobias says, why buy it? Yeah, well, that's a great question, and I'm asking myself that. First of all, this is truly a commodity. It's not just a magic. Was that right, Ross? Yeah, well, still. Yeah, like, Ross, just read reports off central banks. That's my advice. No, but turn everything off is what I'm saying, Maurice, because at some point, anyways. Why buy it? This is a commodity. It's used by business and, well, humans in general. I mean, oil is an unusual commodity in the sense that there's very few substitutes even today, even with alternative energy and stuff. You might be able to switch from, let's say wheat to corn, and such. There's a substitution effect that's pretty easy in things like grains, for example. Not always, but it's hard to just say, well, with oil prices, so high or so low, we'll just power all the electrical power plants and such, using something different. We're kind of locked in to this, and I know oil's probably a dying industry, and we probably need it to be, but not this year. Okay. So, anyways, there's that. Like, we use oil to drive. We use oil to make plastic. We use oil to make fertilizer. We make roads out of tar, which is at the bottom of the cracking process. Not fracking, cracking. At the top, there's jet fuel. Well, there's lots of demand for jet fuel. And I mean, we just need this stuff. Okay? And unless you really think the end is near, as far as capitalism, like, this is it, this is going to drop and everything's going to be worth zero and we're going back to zombie apocalypse world, or even worse, like France, then I would look for a bottom using technical analysis, using psychological analysis. Brent at 50, WTF 40, what is the all-time low? Like, how much lower can it go? And are things in play to put oil prices back up? Well, we talked about the OPEC meeting, right? We talked about OPEC and Russia. And by the way, I hope you're okay. Like, our webinar today just feels like it's you and me hanging out at a bar or a coffee shop, having a drink, just talking. I didn't mean it to be this way, but that's how it feels. Maybe it's just the mood I'm in. But anyways, so there we are. Oh, now I've lost my train of thought. What was it now? It's a chill stream today. If I thought that, the Russians and the OPEC, okay. OPEC and Russia have gotten together and they made their cuts and right. So that's supply. And let's say demand is generally on an annual basis going to be about the same. Okay? So I'm going to freeze demand in our thought process. Demand next year is going to be relatively similar to this year. 2019 is going to be a lot like 2018. Okay, great. So I'm just going to freeze that curve. So now we're looking at supply, and OPEC and Russia have made the supply cuts. But we talked about it would take 2 or 3 months for us to even verify that those cuts have been made and for supplies to come down. But if that happens, then at some point, oil, based on a supply and demand model, should go up. And what if I was thinking about holding oil for a year? Right? What are the chances I would be right? What are the chances 1 year from now oil would be higher than $45? And what are the chances that 1 year from now oil would be less than $45? Okay. In that case, that's what I was thinking about. Like, sometimes we're so caught up on a 15-minute chart, we miss things, right? And I was wondering in my meditation that why wonder if $50 for Brent is the bottom? And that I should be now looking for buying some dips. And granted that it's a longer term play, but I'm okay with that. Yeah, Guy says maybe it's more like April, May. And yeah, we did talk about that in November, I guess it was. Okay. Then we throw in some like pivot points. And we're at January's pivot point now. So the way that it looks is that January's low is what, $43? And January's high is 56. So that's what my analysis tells me so far. Okay. And then if that's true, I can guess that February's bottom is going to be like $50 and the top would be more like $62. Okay. Now, this type of move, however, is typically following the stock market. Okay. So going back to this idea that you shouldn't listen to any news outlet and such, I was listening to a news outlet, but hear me out on this. I'm not contradicting myself because I don't listen to news and stuff, and I certainly don't listen to opinions. But what they were saying is the interviewer said they went out and interviewed the oil people, and they said oil fell because the stock market fell. And then they went and interviewed the stock market people, and they said the stock market fell because the oil market fell. So the oil guys said it was the stock guys, and the stock guys said it was the oil guys. Meanwhile, everything fell. So that's why I don't listen to them, because people is stupid. So anyways, I'm just wondering, we're based on the technical analysis tools that we use, we're pretty close to the bottom. In fact, we already hit our bottom. Okay. And so maybe we start tiptoeing up, or how much do I lose? I'm going to lose, so like basic swing trading, for example, if you bought here, your stop would be here. So you would lose this much. Cool. So anyways, that was a thought. So if oil does bottom out, then the Canadian dollar should benefit. Kiwi yen fell hard. Don't give in without a fight. So just marking my lines, just doing my job. La-dee-da-dee-da. Well, if you think the stock market's going to rally, you'd play this like a bottom, a double bottom. Next part should be higher high, higher low, higher high. Do I think a bull would buy here now? Do you think that this is support? Before you even look for a bottom, you have to ask you that. So Cedric, do you consider that support? And you shouldn't even be asking that question now. You should be asking it like way up here. Okay, so Cedric says yes. So then Cedric, you'd say, well, somewhere around that price, you would need to see more than just a touch. You'd need to see something like a double bottom. Okay? And then an ultra, ultra, ultra conservative would want to see something like that. Okay? So if you're a bull and you believe that's support, you should be on a 15-minute chart, let's say. And you should be looking for a double bottom forming in here somewhere. Yeah, we are. The question is, how does the yen strength play out when we've already had yen strength? And that's the part that messes it up. Okay, and it wouldn't interfere with what a bull wants to do. And as a bear would want a bull to bring it up anyways. So, right? So as a bull, you're not going to see like just this. You got to let the bulls do what they want to do and pick your prices. So if you're a bear, you want to sell it up here anyways. Yeah. Well, Jeremy, let's say if oil went up, the Canadian dollar would likely benefit. We don't know for sure. Something bad could be happening in the Canadian economy. Something bad could be happening in Canadian politics. But yeah, generally speaking, if oil goes up, Canada sells a lot of oil, so it should benefit. And then with Brexit, yeah, I could see how Brexit could possibly weaken it. But we also see, periods of time when the pound is very strong. So even if the CAD is strong, the pound might be strong. So again, you need to take what you believe is right and then use technical analysis to confirm or deny it. Okay? So there are times, based on what you're saying, could work out fantastically and then 24 hours later not work out fantastically because market conditions have changed. That's why we use technical analysis. Okay? How about our gold? Yeah, and it might be, Jeremy. How about this? This is what, our third leg now, guys. Anyways, boom, 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 boom. Now, the projected high that I gave you guys was basically 1260. And I'm sorry, it's at 1275 now. Sorry. And just as a reminder, we had this locked up like this for a very long time. One of the things I was teaching you is the breakout pullback strategy. And what that means is you're not necessarily predicting that these are the big moves, okay? You buy there and you sell there, but you're only targeting the next, in this case, if you sell here, you're only targeting support. If you buy here, you're only targeting next level of resistance. But when there's a breakout, that's the important thing. That's a safe haven, Cedric. It happens anytime there's a safe haven flow. So for example, Cedric, do you know any other safe haven flows? If you cashed out of the stock market, Cedric, what is it that you can do with your money? What could you buy with your money that's significantly safer than the stock market, especially a falling stock market? Okay, yeah, great, that happened. What else? Jeremy, that's funny. No, not the euro. Bitcoin. No, that would be probably the opposite. Sit in cash is not a decision. No. If you're a professional money manager, you'd be fired. Nobody was going to pay you to sit on their cash. Come on, guys. Bonds. Thank you. Swiss franc. Thank you. Yeah, typically it's the bond market. When the stock market's falling, the bond market is rising. That is also happening right now. So gold and bonds are for sure things that you would buy. There's also like Swiss franc and Japanese yen. Absolutely. Yeah, T-bills are treasuries, but they're the same as bonds. But yes. So for example, the 10-year T-note used to be 3.3. Now it's 2.7, which means somebody bought bonds, drove up the price, and because the price is high, the yield has fallen significantly, which tells us a lot of people have bought treasuries. Now, did the U.S. dollar get ripper strong? I'd say no. No, it didn't get ripper strong. So what does that tell us? It tells us foreigners did not buy the 10-year T-note. Americans simply moved their money out of the stock market and bought bonds or treasuries. And you say, so, yeah. So it's just Americans running around yelling, the sky is falling, the sky is falling. Okay? But it doesn't seem to be global in that sense. Otherwise, the US dollar would be crazy strong. And I mean like crazy strong. Okay? And so we could look at pound on a 4-hour chart. Does that look, so that's like 1 month of price action. Does that look crazy strong? against the pound, right? No. USD yen, does that look crazy strong? No, it actually looks weak against the yen. So we knew yen is going to be an international flow. Okay? International flow, safe haven for Japanese investors, but nothing going on there for Americans. Americans are not moving it, right? So on and so forth. You know, it's strong versus CAD, but it's only because CAD is weak, right? That kind of stuff. And then against Euro, 4-hour chart. Does that, when we're looking at the Euro on a 4-hour chart, does that look like the dollar is unbelievably strong? Like ridiculously strong because the global economy is collapsing and everyone's running to safe havens? No, in fact, not at all. So that's what I'm saying. Like, this is an American concern more than anything. And what I tend to believe now, thank you for subscribing, Peter. What I'm thinking now is once people finish doing what they want to do, and that means for a lot of people to take profit in the stock market and then buy it back. So I think what we'll have is sort of another down January and probably another down February. But along there's going to be giant rallies. And then we're going to have slow declines, which is typically the opposite. But anyways, I think what we're doing is we're changing our portfolios. There's a lot of indexing right now. People very foolishly bought hedge funds when the markets were down and found out that they paid way too much for mediocre results. So then way late in the cycle, people started moving to index funds, which is, again, way late in the cycle. It's a wrong decision. But so now everyone's in these index funds, but you don't want to be in an index fund at the top of a cycle because, and you may recall this 2 weeks ago, maybe 3 weeks ago, I said there was a time when a rising tide was raising all ships. Well, that's the time to be an index. But when some of the ships start sinking and others are floating, that's when you need someone that can discern the difference between a good stock and a great stock, or a good stock and a bad stock. And that's where you need, true professionals that are willing to do the work. And I was laughing at these ads that I hear on Bloomberg about, why would you own a single stock when you could own the whole sector? Well, that's the dumbest thing I've ever heard. Why would you want to own a single stock? Because you did the research and the analysis and you know it's the best one to own. Why would you want to own an entire sector, including all the crappy companies, all the companies that are just overfinanced and should have died 5 years ago, but they borrowed free money and for some reason they still haven't died, but they should die? Like, what kind of crazy world did we get into where you want to own everything? Good, the bad, and the ugly. That just sounds dumb. So anyways, we're in a market where whoever bought that garbage is going to get punished because it's dumb money. If you don't want to do the work, you're dumb money. Oh, I can't pick a winning stock, so I'll buy the whole sector. That's dumb. So we're kind of washing out these people that are the sick and the weak, I guess. We'll see what happens. I think it'll be a very interesting few years. And the dentist, thank you, Jeremy, but at least they have enough money to keep going, right? So anyways, I look at these prices in front of me and I say, oh, it's an American problem. It's not global. And the American problem is everyone dumped all their money into everything, and the Fed pushed all asset prices up. And those days are now over, and now we have to, in a sense, like right size. Our portfolios are overinflated. So we need to right size. We need to some things are overvalued and some things are crazy overvalued. But the system works. We have safe banking. We have credit markets that function. interest rates are not too high. They're only to the level of inflation, and inflation is at a 100-year low. So if anything, inflation is so low, it's a problem, and interest rates are at that unbelievably low level. So we have money available. If you need to build a new factory, if you need to buy an apartment building, if you need to borrow money for your inventory, money is available. We're drowning in money, and that's another reason it's cheap. So we have cheap access to money, which is credit, all that kind of stuff. And because credit's so low, that's why the job market, like everyone that wants a job has a job. So like there's nothing bad going on in the U.S. economy at the moment. Now, if you analyze it and say, well, Wayne, we're on our way to zombie apocalypse or even worse, France, then then your analysis is different from mine. But it seems to me that the U.S. market is decoupled a bit, and now we're right-sizing, and I think we have another 4, maybe 5 years to go before the zombie apocalypse. Yeah, Ming says the lazy money getting ripped to shred, but isn't that where we're supposed to make money? I think if you guys can sit down with yourself, maybe even have a business planning retreat like I recommended a million times. But you need to really sit down and maybe make a mental and emotional turning point in your trading career. And say, what do you want to do like the next 2 or 3 years? Like how do you want to trade? What kind of trader do you want to be? Do you want the next 3 years to be like your last 3 years, or you just kind of log in, play some Forex for a few hours, and then maybe it's up today, maybe it's down today, or do you want to start treating it a little bit bigger, longer term? Asking yourself the bigger questions, is this a bottom for oil? How long will that take? When are the important dates for that? When's the next OPEC meeting? Where do these reductions come into place? When does that get reported in the newspaper? Because you want to be 2 weeks ahead of whatever happens in the newspaper, right? Before it gets priced in. So if we're talking about an April price in, shouldn't we be thinking about it now? And shouldn't you be buying into it now based on your future expectations? Or do you want to just base all your trading on what happened last night in the London session, right? Like, do you want to mentally prepare yourself for trading bigger money? $1 million, $10 million, $100 million. What would you do? What would the clients be like? What would your concerns be? Pull yourself out, I think, and ask yourself some of these questions. So if we are within 6 months of a bottom in oil, what would the consequences of that be? What would go up? What would go down? Gary says, why are credit card interest rates high? Gary, why are weddings expensive? Thank you, Azabu. Okay, thanks, Arcades. Why are weddings so high or expensive? Why are weddings so expensive? Are weddings cheap in any country, anywhere in the world? Thank you, Rob, because they can be, because people are willing to pay it. Thank you, Rob. That's exactly right. Why are credit cards so expensive? Because people pay it. If it got so competitive, nobody was going to be willing to pay 22%. Instead, those cards would die and everyone would only charge 15%. Well, that would be great. Then that would happen, guys. What makes credit cards so high? Because people are willing to pay it. That's all. How does Bugatti come up with a price for their new car? They're like, $4 million for a car. That just doesn't seem right. We should make it $4.5 million. Okay? Wine like Peter Schiff. Right? One thing about real estate is you can calculate exactly what something is worth. I can bust out a pen and paper and say, that building is overpriced. Here's what it should be priced at. You could just do the math. Many other things are not that way. Okay? Interest rates are low. But here's the thing. Most people are poor and uneducated. That's it. So for most people, most people don't matter in the individuals relative to the entire economy, right? So now you're talking about large aggregates of people and their spending. So like if you're going to buy, I said like if you're going to buy a skyscraper or an apartment building or something, you have access to the money and it's cheap. But most people don't buy apartment buildings, right? Most people don't have much money in the bank at all. So credit card is helpful. I have credit cards. I have 2 credit cards, I think. American Express and a Visa. And I don't know what the interest rate is, but I don't carry balances. Right? But one of my credit cards is Steel. So yeah, no, Edwards is right. Edwards says weddings are expensive because people want the nicest stuff and get played off their emotions. Totally right. Absolutely correct. It's just because people are willing to pay for them. And the funniest thing, it's like poor people spend a lot of money on weddings and stuff. But maybe it's why they're poor. I mean, I don't know. Like, there's always going to be rich people. Like, for example, back when I used to go to New York all the time, I'd hang out in the Bull and Bear, which is part of the Waldorf Astoria. And I was asking Adele, who was the head bartender there at the time. I don't know if he's retired yet or not. But this guy knows everybody in New York City. But anyways, I'm having my drink, and we're talking about the hotel. And we're talking about weddings because there was a wedding going on. And I said, what's the average cost of a wedding at the Waldorf Astoria? And he said, $2 million. But the thing is, people that spend $2 million on a wedding at the Waldorf, the $2 million is meaningless. They have so much more. I mean, it's just nothing. It's their daughter's wedding, and it's $2 million. Like, it's not even a big deal. Like, it's not even amazing. It's just a wedding at the Waldorf. But then there are people that have like $20,000 in their bank account, and they'll spend $30,000 on a wedding. So anyways, that's why credit cards are not, I mean, they're still tied to the 10-year T-note, but not to the extent. So if a poor person can't borrow money from a bank or can't do an equity line of credit off their home because they don't own any assets, then they use credit cards. But I think credit cards are very necessary tools. Several years ago, I had American Express call me and they said, hey, if you double your spending on your American Express card, we will give you a Lamborghini for free. And I said, really? I'm like, yeah. Turned out it was a Gallardo, so forget it. But yeah. But I don't think they even charge me an interest rate. Like, honestly, I have no idea, but I don't carry balances. So that's sort of a different thing. It's a cash flow thing. It's an accounting thing. You guys want to look at the ZAR? Yeah, Flex, you'd probably have an awesome wedding. Hey, Flex? How much was I spending? I don't remember. Let me think. $35,000 a month, I guess. Probably. Yeah, probably 35,000 a month was probably a pretty good idea. Now I spread it around just because points are different now than they used to be and all that kind of stuff. Okay. Is that what's going on? Well, if we were going to get czar strength, we need a strong global economy. And we need to wait on that. But technically speaking, this is the price you'd want it to occur at. So it just really depends if you're bullish or bearish or something. You know what I mean? Yeah, Jeremy, it is nice right here. It's nice. I think it's too early in the game. I'm thinking like a move like this happens in August or September. So, I mean, we might be 6 months away on this before we even start thinking. I mean, we might be 8 months away before we think of a move like that. But our technical analysis tells us that if this was going to go down, so let's say there's a huge stock market rally. Instead of the stock market falling in the first 3 weeks of January, let's say we already had the downward move. So the first 3 weeks of January are completely bullish, up, up, and up. Then this would take place. Highlander's question. Yeah, you could put that together. The peso trade. See, like, I can easily get washed out of this trade based on things like I see that there's uncertainty at the end of the year. Like, I don't know who's trading the last day of the year, and the markets are closed on the first day of the year. So then there's the January 2nd. Like, who's actually trading? I don't know. And that adds to a level of uncertainty that just basically takes me out of a lot of these trades. If this was February, I wouldn't feel this way, but it's not February. So, yeah, we're getting close there. But remember, don't be a robot. Some people tell you to be a robot. Don't be a robot, because robots, yes, they do lack emotions, but they also lack, I don't know, intelligence, right? They just follow rules. Well, then you can invent an EA and live forever. But I don't think that's the reality of things. It's quite a dream. I don't think it's the reality of things. But anyways, if that were to occur, we're pretty low right now, and we'd want this to come up, right? So remind yourself, we want to sell at resistance. So you kind of have to ask yourself where the basic level of resistance is. Okay. And the interesting thing is, if you sold the double top last month, you might still be in this trade. Okay. Consolidation and sort of breakout now. That's cool. But again, for Mexican strength and U.S. weakness, you would want to see positive macroeconomic developments. Is that right, Flex? Flex says pips, the spread's too high for him to even consider czar. Well, one day you'll grow your trading account to something larger, and it won't be a problem anymore. Right? Because it's funny, like you can put it the other way, like, yes, I see that it can move 1,000 pips, but I can't afford the 10 pip spread. Okay. Well, Andrew says time to short the USD Mexican peso, but as I just pointed out, you'd be shorting at support. So, okay, it could fall further, but you're not doing your job. So I would say it's not time to sell the USD Mexican peso. Okay, I would look for something like this and then sell the USD Mexican peso. There's a difference. Okay, there's a difference. By the way, did you guys realize that I said I wouldn't be doing this webinar today and tomorrow if I do it tomorrow? Like this is like a freebie, right? I crawled out of my cave. Yeah, cool though, right? Yeah, no, my pleasure. Maybe I just feel so like oddly something. I feel odd today. Cool. Well, thank you. Caveman, yeah. See, I draw this, and I don't even think that's true. So this pair, I just don't like trading. When it does move like this, you could probably trade something different and do better. And then I'm trying to get this idea like risk on, I want the dollar to weaken, but I also want the yen to weaken. So this just tells me yen is stronger than the dollar. So does it mean dollar's weak? I don't think so, but that's what we'd have to start using our tools to discern. Beautiful short. Let's move this to a daily. Okay. You see that? Why is that meaningful? Thank you for subscribing. Welcome to the family. Why is that important? This is Kiwi Swissy, by the way. Yeah, so like Edward, I would not be trading USD CAD right now. I just explained how foreigners don't seem to be buying the US dollar under this duress that we're in. And the Canadian dollar is actually, well, oil is stable. So CAD shouldn't be strong or weak, right? So it's like, if you're on that one, I think, Edward, you'd be able to find a better one, is all I'm saying. Right on, Gary. Gary says he's addicted to these webinars. Cool. Amir, day trading and swing trading, and back when interest rates were higher, carry trading. Candle pattern, all that. No. Based on just basic day trading / swing trading. Okay. This is the exact price a bear would sell. Just like yesterday, based on day trading / swing trading, this is the exact price a bull would buy. So all you have to know is how to day trade, and it was straightforward. Now, you have to be, let's say, like in today's case, a bear, right? So that's why you drop out to a 4-hour chart. Okay, it seems like you could be a bear here, right? And that would have been your trade, and you would have been done for the day. Okay? A no London breakout strategy. I'm going crazy. Wayne, I'm a harmonic pattern day trader. Cool. I started to watch your videos, and I love your insight. Sweet. I've been using support and resistance lines as confirmation for entries. I'm having a great... Right on, man. Or lady. Lady crazy. Right on, I'm going crazy. Good for you. And are you incorporating that into harmonics? Or are you dropping harmonics and moving to something more simple, or what? By the way, I was thinking of maybe opening up like a Skype channel, and you guys could Skype in and ask questions. And maybe you share your screen so I can put your screen on top of my charts so people can see your charts and hear your voice. And we can talk back and forth in the webinars. Yeah, well, the thing is, I'm not using YouTube to broadcast. I'm broadcasting into YouTube because I find YouTube is so strange. It's not truly integrated into Google very well. So even things like the other day when I scheduled a webinar, I couldn't get it to play properly because it wants to use Hangouts, which is a completely different system than using broadcasting. And it's so weird. Like, why can't I just... I don't know. So no, so I guess I could, but I guess I could do it that way. Seems like YouTube's just going to have a brain fart. Or it's so convoluted, I will have a brain fart. So, if you were a bull on this, how do you play that? Well, my problem is whoever shorted where they were supposed to short. So like I said, this is the exact price here a bear would have shorted based on just knowing how to swing trade. It's a day trading approach to a swing trade, but to me it's just day trading. Which means today, Thursday, right? The short is there. It's not here, it's not here, it's not here, it's not here. Okay? So it's by definition, if you're a bear, that's it. You would have sold that. Great. And the target is here. So I guess if you had to be a bull on this, for whatever reason you're a bull, you still kind of want this to dip down and then pop up and then come down. And then it ends up sort of effectually acting as a is just a bit of a stretch and then back into the range, and we get into a range into this kind of thing. That's how a bull would look at it. I'm not saying that that's right or wrong, but it worked here. So you'd want to see maybe you want it to hit this because you want bears to get out of the trade. So that takes them out. They take profit. And then you get one of these doodads. Okay. Take care, AJ. Yeah, Rob, you need to swing trade. Right? Learn how to swing trade and then incorporate that into day trading. So like this was, you could have traded this in Asia. Well, in my time, which is New York, right? New York time. I would have taken this before I went to bed. Well, even that, Rob, is a little early. 8:30. That's your first of all, you're missing Tokyo Open, and you're entering trades just as they're setting up for Shanghai. So that's not a good time. But I would say in the quiet, depends on really what you're trying to do. So sometimes if I'm scalping Asia, like I'll scalp Shanghai Open, right? And you'll pick up 20 pips or something. But you're talking something bigger, right? So I would trade like an Asian fade typically, and that's something I've been teaching for 15 years, right? So I would time things based on a combination of I'd use like a swing technique on an overnight trade, and you could probably do that more like 5:30 to 7:30. And be in the trade before Tokyo Open at 8 p.m. But starting your trading at 8:30 makes not a lot of sense, unless you have no other time. And then even then, I think I would rather have you trade at 10 than 8:30, because then if you're not going to really participate in like a Shanghai scalp, which you don't need, then I'd rather you sort of pick the highs and bottoms of the potential high and bottoms of the upcoming London session. Okay, I'm going crazy. I see what you're saying. Okay. Well, yeah, even then, well, you're missing Shanghai, though. So, yeah, Tokyo Open is great, and it used to be the big part of the Asian evening. Now it's a lot more Shanghai. But if you're skipping the Asian session, really just doing a full day trade, then that's fine. Going back to I'm going crazy's comments about using harmonics on top of like my pivots and stuff. I'm a little concerned by the way that the language you're using, which is I guess you're newer to these webinars. I'm wondering if you're not using the pivots properly. So when you say things like above the buy zone, I don't know what that means. Okay? And it might be interesting if you're using some other person's pivot theories. And I don't have another person's pivot theories because no one has ever taught me how to trade. And I'm worried that you look at something, like I'm not saying you're saying this, but I'm worried that you say like, that's my pivot profit zone. That's a bullish, that's a buy zone, for example. That you think that that's where you should buy. Well, it's actually not. A lot of people also incorrectly use the central pivot point as some sort of meaningful thing. And to me, it's not a meaningful thing. Yeah, it's in the training courses, Abdul. FXBootcamp.com. We're starting the new swing trading group in January, so like in 5 days or 6 days, we're starting the new swing trading group the first Friday. So if you're going to take the swing trading course, for example, you need to do that now. And we've incorporated the swing trading course with the swing trading group. So now you can just buy it all in one bundle, makes it easier, but you still need to do the training. Yeah, that's sure, Edward. Yeah. Yeah. You guys never scalped like Shanghai Open? So, Rob, you're not going to be able to attend any of our stuff anymore? That's terrible. Well, AMFX says, what is a Shanghai scalp? It's a scalp at the Shanghai Open. So typically for me, for doing that, I'm at my desk at 9 p.m. Eastern time, and I'm going to pick some pips. Hey, Saline. FXBootcamp.com. Okay, Maurice, FXBootcamp.com. Right, I'm going crazy, but these are all weekly pivots, okay? By the way, I like monthly pivots even better, but so I'd have to it's hard for me to comment because I want to make sure you're trading them properly. That's all I'm saying. I'm not saying you're doing it wrong. Which pairs? For swing trading? Anything you want. You just ask. Typically, it's all yen pairs, all dollar pairs. Ah, okay. You don't know how to use pivot points. I'm going crazy. Sorry. There you go. Figured it out. Yeah. I know that's what some people teach, but some people learn pivot points by reading other people's books, who learn pivot points by reading other people's books, who were written by people that don't know how to trade. Okay. The scalps. Well, typically it's yen pairs because it's Asia. All right, just think about it. Like, what banks open when Japan opens and when China opens? And what currencies do they typically do business in? Well, there's a lot of Aussie, Kiwi, yen. Those are all pretty good ones. Some dollars. Now, if you're trading more exotics, maybe like Thai baht. Maybe you like Singapore dollar. Whatever. But just remember, there's no magic. My wife actually asked me a question. She's like, at what age does magic go away? I'm like, what are you talking about? She's like, well, one day your kids believe in magic and then next day they don't. And I said, well, going back to Veritas, I'm like, well, that's what Veritas means. Like, suddenly you're enlightened and you're powerful, not because of the magic you possess, but power comes from knowledge. And magic is simply from not understanding. Now, some of you guys might get all upset at me at this, but anyways, that was my pitch at the time. That it seems magical if you don't know and you don't understand. So it must be magic, right? But the magic goes away when you understand. So trading if you ever feel like there's magic or black magic even, or people are trading against you, or people are hunting your stops, or it's just because you don't know, you're not doing it right. You don't understand something, and it feels magical in a bad way, I suppose. That there's some unexplained phenomenon keeping you from success. Well, it's just knowledge is what's keeping you from success. Like, look at me. I'm not. There's no. I don't know. Work ethic is probably the most important thing that you need, right? So what I'm trying to get to is what works in the Asian scalping session. Well, think about it. What would work? What gets traded the most when the markets open in Asia? How about Asian currencies, right? And they're like, well, that makes sense. Well, of course it makes sense, right? And it's supposed to make sense. All of this makes sense. And then you take what we look at here, these funny little colors, and very often I'll use you for an example, because you doesn't mean you, it means everyone else but you, but the aggregate you is caught on a 15-minute chart. Yet what we actually are trading are like 8-year business cycles and 18-year real estate cycles. And then there are seasonality cycles. Okay? And these are the things that actually move our markets. Okay? And then on that is just sort of like your normal thing. The month out of the year matters. And in summer, it doesn't move much. And then in the fall, it moves up. And then at the end of the year, it flattens. And then there's a retracement. And, there's these little cycles inside of the larger cycles, inside of the larger cycles, inside of the larger cycles. And newer or amateur traders seem to get caught in this. And they're wondering why, they switched over to harmonics and they're making lots of money. I'm not picking on you, Mr. Harmonic, but I'm just saying in here they're making a lot of money. And then they give it all back here and they're like, what am I doing wrong with the harmonics? And then they try something else and it doesn't work for a while. And they go through a frustrating 3 months in here. And then all of a sudden trading's good and they got it all figured out and they're super fat and rich now. And then it gives it all back and then they're miserable. And what I'm trying to say is technical analysis is important when you're entering your trade and you've already made a decision. And where we are in, seasonality, business cycles, real estate cycles, okay, that's the stuff that matters most. And then when you take all that into a situation, like answering the question, will the stock market go up in the first quarter of 2019 or down? Well, that has to do with those cycles and super cycles. Once you got that all figured out, then the technical analysis is fairly easy. If you want this to go up based on your analysis of cycles and super cycles, now you need to have a double bottom. That's what technical analysis tells us. It's not technically bullish until it bottoms out, or in this case, double bottoms, reverses, and then you start doing this all day until you get to a top of some sort of cycle. The first one is likely going to be seasonality cycle. And then that's fairly easy. It's fairly easy if the tough decision's been made, right? Yeah, I'm going crazy. So anyways, yeah, and so I'm going crazy says something interesting here. Maybe it sounds weird because I'm using pivot points not as a leading indicator, but as a pattern confirmation. And that's not what they do. So most likely, if that's what you're going to have the lens of confirmation bias so strong that I don't think you're probably getting any value out of it. It makes you feel emotionally better, especially when you are wrong and your pattern fails and you lose money. Now you get to say, oh, well, it's these stupid pivot points. Yeah, Jimbo, there's other people too. Now, Ray is funny because he's only really become popular in these talks maybe over the last 5 or 6 years. The guy is a nutcase, but because he's got 30 or 40 billion of personal wealth and he manages 140 billion in money under management. Now he's a genius, right? But the one thing he does or did, I don't think he's done it in a long time, but he simply did the hard work that no one else was really willing and able to do. That's what makes him different. But now that he's so rich, he can write some books, go on some speaking tours, and the media just kisses his butt, and now he's a genius, right? But the guy, if you watched him 15 years ago or 20 years ago, when you put this guy on television, he would curse like a sailor. Like, he would accidentally F-bomb. And he sounded like an absolute moron. He sounded like a thug out of a Russian mafia or something. And he's not even Russian, but it was ugly. So he's cleaned up his act and he's got his $1 billion. Now he can say, now that I'm in the third cycle of my life, I can, shut up. Of course. But oh my God, it's so. I don't know how you say it, fake or something, but to me it's like false idol worshiping, and it's so set up because if this guy didn't have 50 billion in his bank, he'd be an idiot. You know what I mean? But he's successful, and I think what you'll find out is it's because he tries really, really hard and he does the work. Okay? Great. But so what I'm saying is certainly not genius either, even though that's Ray's big thing right now. It's someone else's big thing in the past, and I can't even quote. But I come to the market. I never traded stock in my life. Let's put it this way: never traded stock in my life. I wanted to be a venture capitalist, so I started out as a high-tech entrepreneur, and then I started getting pretty good. Got close on a couple of things. But then I started helping other people raise money. And it just sort of fell into my lap. I knew a lot of people. In the Silicon Valley. So anyways, because of my connections, people came up to me and they're like, hey, I got this fabulous idea and we can raise millions of dollars for people. I'm like, oh, that sounds good. I like doing that. So let's do it. That kind of stuff just fell in my lap. So I raised millions of dollars for people, and it was great because I wanted to move toward being a venture capitalist. And by then, I started knowing lots of venture capitalists, and I had a board of advisors that had lots of venture capitalists. I had, I don't want to go back too far back in my life, but anyways, I knew dozens and dozens and dozens of venture capitalists. And this is before most people even knew what a venture capitalist was, before moving to the Silicon Valley and getting filthy, stinking rich was even a thing. People didn't do it back then. People just wanted to change the world. And a venture capitalist was not a common vernacular. But anyways, so the next thing in my life was like raising money for people and getting their startups going as I was running mine. Cool. And then I became a venture capitalist, and then it was really listening to elevator pitches and looking at prototypes and reviewing patents and negotiating deals and going through review boards and then licensing this technology out to people. And I never once wanted to be a trader. In fact, stock seems like something, it was vulgar. Like, to a venture capitalist, you're changing the world by choosing a company out of 1,000 that you want to not just invest in, but then almost because, I was doing earlier stage stuff, not only would a early stage VC invest into an idea, someone on the board or from your team not only got a board seat, but they basically became a vice president or co-CEO of the company. And you got really involved and you built something. And for that, you own something for like 3 cents a share. Then you do an IPO and sell it to people for $50. So what kind of idiot would buy it for $50? It was never something I wanted to do. Pay $50 for a stock? You're like, that's ridiculous. I liked it at 3 cents, But you would make these decisions based on changing the world, not by buying stock and hoping it goes up. It just never sounded good to me. So how I got into this was, I was a businessman, right? I'm not a businessman. I'm a businessman. Jay-Z. Props out to Jay-Z. So I came to Forex more in tune to like, why does it work this way? Oh, banks. Banks are involved. Okay, what are banks trying to do? And sometimes it gets down to something, going back to whoever asked about scalping Shanghai. Why scalp Shanghai? Well, it's when the banks open. Oh, that's important? Yes. So what happens to a Japanese bank or Chinese bank when they close for the evening or for the weekend? Clients are still doing business, and they're like, hey, wire this money here, wire that money there, do this and do that, right? And all these orders are like building up at the bank. And then 9 a.m., the bank opens, and the bank sits down, and they got all these wires ready to go, and they go, boop, 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 boop. And the money moves from that country to another country. Oh my gourd. That's what foreign exchange is. And as they move, they convert. So you get volatility around when banks open in Japan. By the way, banks in Japan and Korea open at 8 p.m., but also trading in Australia is halted like until what, like 10 o'clock in the morning Australian time to coincide with the Japanese open. So you get like trading. Oh, and then the rest of the financial markets all at 8, and you're basically getting Kiwi banks, Australian trading, and then everything in Japan and everything in Korea all at once, and then an hour and a half later Shanghai opens, and now all of Asia's open. Okay. Okay. And what I'm trying to get to is like, oh, well, that makes sense, doesn't it? It's common sense that that's when a bank is going to process overnight wire transfers that have built up. And you're going to get some foreign exchange trading based on wiring money across borders. And that these things matter. And things like economic cycles and business cycles and real estate cycles and all of this stuff, super cycles. I've never read anything about it. It just makes sense. I think the only real book that I've read on trading had nothing to do with trading, actually. I read a book on, I guess it was bonds or something like that. Bonds or treasuries. It might have been treasuries. And I think specifically, I think you could boil it down to, I read a very technical book, not technical analysis, technical math. I read a very mathematical book about yields and the yield spread and the yield curve. And I found that very helpful, not because it's what we do, but because what impacts that cycle impacts other cycles. Okay? And so like when the stock market is crashing 20%, we can have a conversation about, well, why do stock markets crash? I mean, we know sometimes they decline because prices get they get overvalued for various reasons, like free money, cheap money, easy money, artificially cheap and easy money. Well, that'll do it. And when that artificially cheap and easy money goes away, these prices must come down, right? Because there's nothing propping them up anymore. They'll go back down to some sort of market value, or let's say a more realistic value. Does that mean crash, or does it mean revaluation? Well, AMFX, all scalps are on a 1 minute chart. Otherwise, it's not a scalp. Okay. So anyways, Livermore, Jesse Livermore? No. So anyways, we get down to this idea that everything is common sense. When the stock market's going to crash when businesses are doing their normal business, their normal line of business, and business is relatively good, like they're selling things to lots of people. Let's say same store sales are up, right? Revenue is up, and profits are negative. What happens if prices are up, sales are up, same store sales are up, revenue is up, and profits are zero or even negative? They're losing money. Those companies can't survive. Well, what economic conditions? Can you even have conditions where your sales are up but you're not profitable? Well, yeah, first of all, your rent has gone up significantly over the last 10 years. There's a real estate cycle. Employees are hard to get. And when you can get an employee, it's not a very good employee, and you have to pay them too much money. They're getting a very high wage, and you have to attract them with lots of benefits and buy them lunch and put a ping pong table in the back room. And then when they get there, nobody does any work. And on top of that, you got to provide them with benefits. You got to match their 401k and all this kind of stuff. And you're like, oh my God, 50% of my expenses are now just my employees. And then your rent has gone up. But what else has gone up? Electricity is expensive. The company that comes and cleans your fish tank has doubled in price. And all of a sudden, everything has gone up in cost. You're like, oh my gosh, it's so expensive. And now your profit margins are down to like 3%. And meanwhile, over the last 5 years, the Fed has raised interest rates to 6%. And you add it all up, and people are coming to your store and they're buying your shoes, but your shoes cost more. The money you borrowed money, right? So the money you borrowed to buy the shoes has gone up. Your rent has gone up. Your employees have gone up. Insurance costs gone up. Electrical has gone up. Like everything has gone up. Your advertising is way more expensive and all this kind of stuff. Everything is expensive. And then you look at it and you're like, oh my God, we used to have 3% profit margins after all of those expenses. But now my cost of borrowing money just to buy my inventory is now at 6%, which means I'm actually losing money. I'm not losing a lot of money. I'm still paying my rent and I'm still paying my employees and stuff, but every time I sell a pair of shoes, I lose $2 or $3. I'm losing $3 every time I sell a pair of $100 shoes. And that's when you have to seriously worry about a systemic decline in asset prices. Because that's why everything's expensive. An employee is an asset. They cost too much money. Your real estate is an asset. It costs too much money, right? Your inventory is an asset. It costs too much money. So all of that has to come down to the real world. And once that revaluation is done, then you can get an engineer with 3 PhDs working in your shoe store for cheap. And they're damn happy to have that job. So they show up early and they work hard. You don't have to hire employees that show up late and just stand around and do nothing and talk in circles over in the corner and not helping your clients. But that's the best you can get at the top of the cycle. You see what I mean? So are we there yet? Well, yes, we're near full employment. Yes, interest rates have been going up. Are we at the point where a business cannot do business and make money? No, I don't think so. My fundamental analysis of the U.S. economy is that, hey, things are overvalued. Asset prices are coming down, but we're not at a point where the whole economy is going to crash and we either turn into France or, if we're lucky, a zombie apocalypse, right? We won't get there. Rob says Shanghai explains volatility you see around 9:30, 10. That's exactly Shanghai, so you should be at your chart at 9. Right, Robbie? So I think if you want to save the world, and I said this 6 years ago, I said China should stop doing stimulus for its own country. China should take a whole bunch of its euros and go to Europe and save Europe. And they should have listened to me then. So now China's in a slump again. They're going to do some economic stimulus, but it has nothing to do with China. And it's all these things that Europe is doing. And, it's going to be a problem. Europe is frustrating. And I don't mean to insult our European friends here. But, socialist capitalism doesn't work because there's socialism to it. So that just doesn't work. I understand that there are different economic systems that tend to try to lead to the same thing. And pure capitalism, or American form of capitalism, is not perfect. It certainly is not perfect. And there's a lot of things ugly about it. But it can work. And yes, it goes through cycles, and it can lead to excess, and it could lead to some people being extravagantly wealthy and some people not being. But in my opinion, it's better than everyone being poor, right? And some of the mistakes happening, like the creation of the ECB, was sort of a flawed compromise, but compromising is almost always flawed, right? So the European model says we like capitalism-ishness, but it can't be the American way because we hold, different values. And so based on our European values, we make different decisions. And I get that. And I kind of like that there's a European version of capitalism. But there's consequences like high unemployment. It's just part of a European model. But then this idea like Germany and Greece being treated the same way, well, that led to a financial crisis because Germany and Greece are not economically similar, and they should not be treated the same. And the ECB only having an inflationary mandate and not having power and oversight over individual countries, well, that also might be a mistake. And then Brexit, oh my God, what was that all about? So maybe Brexit gets the whole process moving so it fixes. I don't really know, but there's some really big challenges in Europe and UK because UK is dealing with Europe, let's just call it Europe in general. And they're really big questions. And I don't even know if they're being addressed properly, yet alone what kind of time frame are we going to get for resolution, right? And I think that is the bigger question. Like I said earlier, it's not Trump negotiating with Xi over that. I mean, what they're both doing is logical, and they'll get a deal, and it'll be a better deal. See, like the deal the United States has with China and a lot of other countries is based on the Cold War. Okay? And the United States, through the sacrifice of money, not men and bombs, but through money, converted, which I call World War IV. Okay, World War IV is the defeat of communism per se in China, and turning it from socialist communism to capitalist communism. That was a victory and the United States won that virtually on its own, using money. World War III, the Soviet Union was defeated, once again, not with bombs, but with dollars. Okay, World War IV was against socialist communist China, and now they're capitalist communist China. And now we can live in a giant world of peace and prosperity. So those original deals struck in the 60s and 70s, well, not even 60s. When did Nixon go? Actually, that was 50s, wasn't it? So since the 60s and 70s, I mean, I remember the day like WTO allowed the trade of like suitcases out of China. I remember that day, like, oh my God, suitcases are going to get so cheap now. And they did. So a lot of these deals were struck with the aim of giving unbelievably, ridiculously poor China a sweet deal to help them grow and build their economy from scratch and participate in the global economy. Because before then, they were like Cuba. Like, they didn't participate in the global economy, and they suffered for it. So now that they're a major part of the global economy, and they have a mature economy, and very well-educated entrepreneurs and capitalists in China, maybe it's time to renegotiate those original deals. I don't think there's a problem with that. But the UK and Europe not participating in global trade because they're broke, that is a problem. And that's what socialism does. So China was socialist communist, and they were dirt poor peasants. And then they went from socialist communist to capitalist communist. Now they're filthy, stinking rich. So when you look at Europe and they're like, oh, we don't want to be capitalists, we want to be socialists. Well, you're going to drive your economy into poverty. Sorry. It's been tested 1,000 billion times. It doesn't lead anywhere good. So anyways, I'm hoping Europe fixes itself, gets it back into the global economy, and everything is right as rain. First of all, no billionaires in cash. Not even close. No, I call the Third World War the war that we had with the Soviet Union. The United States didn't nuke the Soviet Union. We bankrupted them with dollars. We won that world war with money. This is, by the way, this is all my opinion. It's actually a book I've never written. But anyways, capitalism beat socialism and socialist communism against the Soviet Union. In fact, the Soviet Union almost went broke during the Nixon years in the early 70s, and it was only because of the incredible, remarkably stupid foreign policy of several U.S. administrations, but in particular Nixon's, that led to the oil embargo from the Middle East. And all of a sudden, oil prices jumped 300% and saved the Soviet Union. saved it. They were on the brink of collapse. They were actually getting ready to collapse the whole thing. And then suddenly, ba-da! Free money just rained from the sky. And they're like, oh, I don't think they prayed because anyways, they're like, oh my gosh, right? And the Soviet Union was saved from the raping and pillaging of the Middle East by the Western world, and the level of retardation in America that not only saw this embargo coming, they not only did they actually instigated it. So I don't know if you know this part in history, but it got to the point where Saudi Arabia got sent an envoy to the White House, like sent someone to the White House and told the Nixon administration, hey, like seriously, guys, we're backed into a corner here, right? We're going to have to use oil as a weapon. We do not want this, all right? We're the major oil supplier right now for the entire world. Because remember, this is before the North Sea oil. This was before Alaska had oil. So they're like, dude, we're making money hand over fist. We get it. And we don't even have that great of a deal, but we're like super rich and we can deal with this. And you're not giving us a fair deal, but we can do this. But all our brothers and sisters around the Middle East, including Egypt, they're freaking out here. And we're at a point where we have to go to war. Like, we can't push this off anymore. Please, Nixon, please don't send weapons to Israel, please, because it's the tipping point, and everyone's going to go to war. And if Egypt's going to go to war, we have to go to war, and we're going to have to weaponize oil, and this all can be stopped. Just please don't send weapons to Israel, right? And Nixon's like, yeah, let's send weapons to Israel. Right? Oh my God. Okay. So anyways, let's say you agree with this, you don't agree with this. So anyways, Nixon says, all right, this is going to be a problem. We cannot get caught here. We're going to send weapons to Israel, but can you hear me, everybody? Do not get caught. So the military says to the president, okay, we'll send airplanes to Israel, and we'll send them in the dead of night on an evening with no full moon. And we'll fly in with all the lights off on the airplanes, and we'll just come in, we'll drop the packages, and we will be gone in less than a minute. We won't even slow the plane down. We'll just come in, open the back of the plane, everything gets pulled out, and it's just a touch and go, Mr. President. We will be gone in 30 seconds. And he's like, that sounds really good. Do it next, whatever. So here's what happens. They load the planes, and there's problems. And it takes an hour, and 2, and 3, and 4, and 5, 6 hours the planes leave late. 6 hours late. So the planes are flying in to Israel at noon. And everyone's standing there like, oh my God, are the Americans actually bringing these weapons in? Like at noon, like in our face? Like, don't give Nixon that kind of credit. Like, boom, you send those weapons now and you send them in the noon. Show those guys a message. No, it was just total incompetence. But anyways, it led not only to the oil embargo and the crash of the U.S. economy, it led to the resurgence of Soviet communism for another 20 years. And the president went to jail. Or no, they kicked him out. Did they impeach him? He killed himself. I don't know. Something happened to Nixon, and he's gone. So he lost his presidency. Like, oh my God, you're kidding me, right? Oh yeah, okay. So Pharaoh, I don't even know who you're talking about. Sorry, man. Yeah, sorry, Pharaoh. I don't know who you're talking about. I missed it. Sorry. Going on to my own stories here. Yeah, I don't know what you guys are talking about. Sorry. So anyways, there's a little, I don't know, probably grossly simplified and potentially incorrect history of the world. But there you go. Warren Buffett went to school. Well, I guess we'll call it a day, right? I babbled on along there. It's been 2 hours. Yeah, I guess that's enough, isn't it? Oh, is that right, Russ? You resigned? Well, Jonathan, what I said in the past, like, let's go back, let's say March 2018. I said somewhere in the beginning, somewhere between the beginning of December and the end of December. So let's say by the end of the December, we should see some yen strength, and then we will see a lot of yen strength throughout January, except the third week in January, we'd get a false rally. Okay? And then it would strengthen again. The yen pairs would fall. That's what I said in March 2018. So what has actually happened? The yen did get strong, but not at the end of December, in the beginning of December. So, like, I'm partially right there, right? I'd get like a B minus for that. The only thing what was off was I was essentially 2 weeks late, based on my guess 47 weeks ago. So now what? Well, I'm concerned that it's moved so much. I'm not sure if there's enough room for it to move further, but I think it can. Okay? But what about, like, when's the false rally? Is the false rally going to be the third week of January or the first? Like, I could see a relief rally would be fantastic before a drop. But I don't know. I really don't know. So unfortunately, I think there's going to be a lot of hard work. So that's why I'm starting the swing trading group early this year. Typically, I don't start until a week after non-farm payrolls. But we're going to start January 4th, which is like the first Friday of the year, because we need to pay attention, I think. Right? Yes, Edward, that's repatriation, but that doesn't. So the stock market declining, that's just that's sort of just risk off. Okay. Now, Edward says bringing money back home. That really doesn't happen until about March. That's a different trade. Now, technically and even fundamentally, it works the same. But the logic behind it, or the strategy behind it, is for different reasons. No, Jonathan, see, it's all the same. You guys have to realize it's not one or the other. That would be a normal thing. The yen gets strong because the Aussie gets weak. It's not that the yen is strong and some other random reason the Aussie's weak, therefore it's exaggerated. No, sort of, yes. Yes, there's a level of independence between these two. Okay? But macroeconomics explains that because Aussie weak, or whatever happens in macroeconomics, it weakens the Aussie and strengthens the yen. Okay? Now think about it. If you go back to, what did I say, March of 2018? I said in the second week, between the first and the last of the month, somewhere in the middle, in this case here. And if you remember at the time, at this time, I actually talked about 2 years earlier on December 12th was the actual day the the yen gained strength. Okay? Does anyone remember this? On this day, we talked about December 12th, a year or two earlier, as being the exact day that this move occurred, and that was the day that this was happening. You can see now I can even backtrack and prove it was the 12th, right? We talked about it. The 12th was the day that the yen pair moved down, right? So they're all interrelated. Don't think of them as one or the other in most situations. In particular, Aussie versus yen. A yen is a gauge of macroeconomics. So I filter everything through that lens. Okay. So another version of that, AMFX says CAD Swissy. Why is that tanking? The same reason that the yen would be moving to the downside. Okay. So for example, if Aussie yen is doing this over the last day, this is tanking. Aussie Swissy should be doing the same thing too, mostly. To, let's say, at least 89% resemblance. Okay? If macroeconomic conditions are the drivers. Okay? And that's just economics. Simple, plain economics. Right? Right. Well, Edward, that's been well established. Nothing new, right? But why is it like now? And why does the yen get strong? Why does the Swissy get strong? I'm trying to teach you this, guys, and I don't know if I'm doing a good job of it. I'm trying to teach you this so that when you see oil fall, I don't give two hoots about what's happening now, because it happened 3 years ago, 6 years ago, 9 years ago, 12 years ago, and it's going to happen 3 years from now, 6 years from now, 9 years from now. I don't mean a 3-year cycle. I just mean it's happened a million times in the past. It's going to happen a million more times. So what's happening now, I don't give two hoots. It's worthless. Who cares? You're like, but I could be making $2 now, Wayne. All right, let's get past your $2. In the next 27 years, you need to say, in situations where oil is going down, I should do A, B, C, and D to make money. But when oil is going up, that means something different, and I should be doing 1, 2, 3, and 4 different things to make money. And you understand these relationships. And if B is making money, then there's probably 1, 2, and 3 other things related to this that will probably also do pretty well as well. And then all of a sudden, you're putting yourself into situations where you're looking at oil now to set up this, and as a second wave, take advantage of this. Okay, and this is too much information for you just to only trade a 15-minute chart, because by the time your 15-minute chart is begun and done, you've only had 1 or 2 opportunities out of the 6 or 7 to make money. But if you're asking yourself, is oil going down for a longer term or going up for a longer term, then gives you enough times on other time frames to get A, B, C, and D, and Roman numeral 1, 2, and 3. Yeah, I did, Pharaoh. Thank you. Hope you did too. Jonathan says, what indicators would I look for a false rally on Aussie yen? Well, the most important thing is I have a rough time frame in which I'm looking for it, and I'm looking for it. So similar to the Hawthorne effect, I'm going to find a reversal. I'm going to find a false rally, even if the false rally is false. I'm going to find one, right? Like Nietzsche said, perception creates reality. So the thing is, I'm ready in the second or third or fourth, but probably third week of January. I'm going to be ready for a bouncy poop, and I'm going to be waiting and looking for it, and I'll probably find something, okay? Because it's all pre-built into the bias. So what do you look for? Well, first of all, support, and second of all, reversal patterns. What indicator? You don't need any indicator for that. You need a calendar. Right, Jonathan? Then what? Well, you need to identify support. How to use support? You can use price action. Oops, that was supposed to be P. You can use price action, or you can use pivot points, right? And then you can use psych levels. So I'll find something somewhere. And then on top of that, now you're going to need a reversal pattern. And you can use moving averages, you can use candlestick patterns, you can use harmonics, you can use... Dude, if you know where, if you know when, and then you do some analysis and you can basically tell the price, what level of technical analysis you need to from then make a decision, that's up to you. And I don't care if it's harmonic patterns or moving average crossovers or candlestick patterns or, you know, nuclear decay or the wobble in the earth or lunar cycles or migration patterns of elephants. Dude, just make a freaking decision, pull the trigger, right? If you know the time to look for it and a pattern, or which creates a price, right? Then the rest is up to you at that point. And that's your individual ability. That's your alpha. Oh, that's nice, Pharaoh. America. Love this country. All right, well, look, it's been, 2.5 hours? Might as well call it a day. Maybe I'll see you tomorrow. Maybe I won't. Not sure. Make sure you subscribe if you want to be invited if I do one. Did somebody say harmonics? Yeah, that's funny. Well, I'm going crazy. I hope you found a home here at the Forex.Today YouTube channel. Good call on Euro Aussie, Wayne. It's reached its target. Hey, it's not me, man. It's just technical analysis. I read charts like concert musician reads notes on a piece of paper. It's not me. It's, you know, it's Mozart. Thank Mozart for that. It's just the charts. Thank you for subscribing. So remember AMFX, I'm trying to teach you so that you can do that yourself. I'm not holding back. I'm not trying to give you just enough so I'm just a little bit smarter and therefore, you know, look, I just want you to succeed. I think you can do this. I teach you everything I know. I'm here absolutely every day. I don't charge for these webinars. It's all taken care of by Traders Way because they love you. They want you to succeed and they want to earn your business. So you have the resources at your disposal, and I hope you take advantage of them. And then I hope you work your ass off and get really, really good at what you do. Okay? Like I was saying before, I don't think Ray Dalio is a genius. I think he's a very rich old man selling genius, which is good because it's very sellable. But I think what likely made him a success is he worked his ass off and he got really good at what he did. And he did the analysis that most people wouldn't do. And that's, I think, the lesson, that he's willing to figure out that the price of a chick is the price of the feed you give to the chick. So if you can break down and understand what you feed a chicken and how that is harvested and processed, and go out into the fields and meet the farmers and get to know that industry, then you can you can figure out pretty accurately the price of chicken in the future. Because guess what? Many little chicks grow to be chickens. And you're like, oh yeah, that would be true. What else is everyone else doing? They're waiting for the chicken report to come out from the poultry division of the government. I don't know, sort of like the crop report. They're waiting for the crop report, but they're not in the fields with the farmers. You see what I mean? That's what Ray Dalio did. He'd be in the fields with the farmers. And if that is what is required to become filthy, stinking rich, then that's what you should do as well. Work your ass off and get really, really good at what you do. Therefore, you can predict the future relatively accurately because you have better data than everybody else. And then you can help other people make decisions. And remember, if you can't look out past your 15-minute chart, you can't see what's happening, you can't prepare what's happening, you don't have a vision for what might be the future, and from that be able to make decisions. And if you want to be worth a lot of money one day, you need to help people that have a lot of money at stake based on their decisions be able to make proper decisions, which means they need to turn to you for knowledge and for advice and for your opinion. Well, what if I said, why don't you give me an outlook for 2019 and 2020? You're like, I don't know anything about that. Well, that's the value you have. And if your answer is you don't know anything about that, then you're lacking some pretty significant value. If you want to be a very wealthy foreign exchange trader, you're going to need to know how to answer those questions. Right? You're going to need to know that. You're just going to. Imagine your client has businesses and investments around the world. I was talking to a billionaire a week ago, maybe, and I might meet with him in Vegas. I might fly out there to have a cigar with him, and because he's in town for a couple of days for New Year's, and then he says, yeah, and then he's going to South America. And I'm like, yeah, going to South America, where are you going to buy some beachfront property in Venezuela? And he's like, oh, God, no. I already own two businesses in Caracas, and, one's an apartment building and the other one's there's all kinds of problems, but, my place way down in Argentina is so much nicer. And that's the kind of conversation you have with these guys where every country you can name, they own property. And after that, he's flying to his $20 million villa in Switzerland to go skiing once he's done with Argentina and all this. This is a normal part of a person's life that has that kind of money. And if you can't describe Swiss politics and European politics and UK politics, but politics in Japan and China and what's going on in Venezuela and interest rates and prices and cash flows and macroeconomic concerns and politics happening in all these countries, like, you're going to need to know that, because guess what? Wealthy, successful people know these things, and very intimately, because they've made investments and they're involved in these places. And let me tell you, I had someone coming up to me and say, after a 3-hour speech from the head of banking for this huge commercial bank, which I won't name, this other billionaire was telling me that he does business in 72 countries, and he does so much business that the head of a very, very large American bank, the head, right, sits down with him and brings his team in once a year to do a presentation. And at the end of this presentation, and bear in mind this was like 6 or 7 years ago, the whole team basically said they had no idea what was going to happen with the euro. And he came up to me at a board meeting, because I was on a board with him. And he comes right up to me through a crowd of people standing around talking to him. He saw me walk in. He came right across the room. He's like, Wayne, you were right. And the entire staff of this giant commercial bank in America had no idea. And he said, I learned more in our 3-minute conversation about the euro with you than a 2-hour conversation with the entire bank. And I said, yeah, I know. I like doing the work. I'm not waiting for year-end bonuses. I like doing the work. And that's kind of where you need to be, guys. And we don't have to talk about billionaires. We can talk about thousandaires. You need to be bigger. And I hope these are like motivational speeches as well as sort of reality speeches. You need to get there. You need to be the person that wealthy, successful, powerful people turn to for advice and support. That's how I want you to look at your trading, right? Stop reading newspapers. Stop watching television. Start reading central bank reports. Okay, the media is going to keep you poor and connected to the next headline, to the next headline, to the next headline, and you're never going to get anywhere successful. You're going to be hooked on television like crack, and crack addicts never succeed. You got to do the work. You say, you know what, I got to turn this TV off. Click. I'm listening to a whole bunch of people that are also not doing the work. And you'd be surprised how many of these people manage very large amounts of money and they have no idea what's going on. Dumb money, finding more dumb money, and lots of dumb money. The world needs you. The world needs people to do the work. The world needs heroes. The world needs to be saved. So it might as well be you. And if you can't change and save the entire world, you need to save yourself and your family's net worth, your relatives, your friends. They need you because nobody else is going to do it. Let me tell you. And these wealth managers with MBAs, they're retards. They don't give two hoots about their clients' money. And they're not very smart. And they're selling you products, not protecting your money. So you got to do it, guys. You got to do it. It's up to you. No one else is going to do it. You got to take care of yourself. And the only way to do it, right? The only way to do it is to do the work. And you know what? You're going to find that it's surprisingly not a lot of work. I'm asking you to once or twice a month go to a website from one of the central banks and read their latest report. What am I talking about? Like, that's once a month go to the RBA website and read one of the reports for a half an hour. And while you're at it, might as well go to the New Zealand, right? The Bank of New Zealand, the Reserve Bank of New Zealand's website, download their report too, and just call it an Asian Pacific meeting. So now you're going to put in 1 hour worth of work. Might as well light up a cigar and enjoy it while you do it. You see what I mean? Yeah, Cedric, go to the Reserve Bank of Australia and read down, do a little search on their website. Usually it's right on the homepage. Their most recent economic outlook or inflation report or something like that. Just download it and read it and highlight everything you don't know and you think might be interesting. Yeah, try installing commercial class. Try being a farmer and digging posts in a hot, dry field for hours and days and weeks, hundreds and hundreds of posts just to put up a fence. Or why don't you, like one person that really motivated me back when I was a young entrepreneur, I worked day and night, weekends and never took holidays, whatever. I'm telling you, I worked 20 hours a day. And if I ever felt sorry for myself, I had someone else to cheer me up. And you know what it was? I ate at the same restaurant every single day. And I basically ate the same meal. So I'd take my work with me and I'd go to this Asian restaurant across the street from my apartment building. I'd just walk in, I'd sit down, they'd bring me my food. I wouldn't even order. It would just show up because I ate every day. And it was owned by this, I think he was Vietnamese. And he was older than me, so he's kind of like a father figure, if you will, even though we never had conversations. I don't think I ever really spoke to him more than 5 sentences. But anyways, he worked day and night, 7 days a week for years and years. No vacation, no Christmas bonuses, no holidays. He had to be up at 5 in the morning to receive all the food coming in from all the trucks, and then get the kitchen ready, and then do lunch, and then do dinner. I'd have dinner at 10 o'clock at night. I'd be the last person there, and and all that kind of stuff. And there's no glory. Like if I succeeded as an entrepreneur, people would always tell me I'm amazing, I'm brilliant. Oh, Wayne, you changed the world. And oh, you work so hard. And I'm like, yeah. But if you owned a little Vietnamese restaurant in San Francisco, you had the same thing, but never a chance for glory, never a chance at riches, just hard work all day long, every day of your life. So I'd look at him and say, you know what? I'm super lucky. I'm super lucky because I have a chance at glory and greatness. And I ain't going to screw it up. And that's real work, isn't it? Look how hard it is. I have to sit in my $1,000 ergonomic chair all day. Like, come on, man. Come on. This is it. This is it. This is awesome. This is totally worth it. So don't screw it up. Yeah. Don't screw it up. This is you're not going to find anything better ever. And you're going to regret it if you don't put in 140% on this one on Forex. If you don't do it, you're going to regret it. Trust me. Don't screw it up. Work twice as hard, twice as much. And by work, I don't mean sit here and play Forex like a video game. So anyways, I got to go. If you're thinking about swing trading with me in 2014, we're starting the first Friday of the year, and you need to be done that swing trading course because it won't let you in the room until you finish the course. So you need to start that now. So you need to go to FX Bootcamp and pay money for the course. I don't even remember what it is. Significantly cheaper than it used to be. You just need to sign up. And there's a bunch of other things in there now too. I think the day trading course is in there. It's just so ridiculously affordable now. And you get so much more on top of it. There's nothing more that can be done to help you if you don't reach out for that. I also expect you to open an account at Trader's Way. At this point, it's an expectation. You need to go to Trader's Way. If you haven't opened an account, shame on you. You need to go there now and do it today. So maybe I'll see you tomorrow. Maybe I'll see you next year. Don't really know. If you're a subscriber, you will be alerted if I stream tomorrow. So make sure you subscribe as well. Hey, peace on earth. May the pips be with you. May your profits be above average. Thank you. Really, thank you. Hope you're enjoying the holidays. Cheers.